Hello everyone, I'm Simo, an equity research analyst specializing in stocks and financial markets, and this is my first video on my new channel, American Investor. Today, I want to talk about Bitcoin, why I see it as a secure long-term investment, and why I believe it could eventually reach $500,000 per coin. We'll explore macroeconomic factors, money supply, institutional adoption, historical trends, and inflation, all from my perspective as someone analyzing markets professionally. Let's start with the basics. Bitcoin is unique because it is scarce. Only 21 million coins will ever exist. That scarcity is fundamental to its value proposition. Unlike dollars, which can be printed endlessly by central banks, Bitcoin's supply is fixed. This is incredibly important in the current economic environment because inflation continues to erode the purchasing power of traditional money. Now, let's talk about M2 money supply. The M2 money supply includes cash, checking deposits, and easily convertible near money like savings deposits. Over the last decade, the M2 supply in the United States has grown dramatically, reaching over $21 trillion in 2025. This growth is fueled by central bank policies, stimulus measures, and loans issued by banks. Every dollar that enters circulation adds to inflationary pressures, reducing the value of money held in cash or low-interest savings accounts. This is why Bitcoin, with its fixed supply and decentralized nature, becomes such an attractive hedge. From a historical perspective, Bitcoin has survived multiple market cycles. From its early days, when it was worth a few dollars, to peaks above $60,000, it has demonstrated resilience in the face of regulatory uncertainty, market crashes, and extreme media skepticism. Bitcoin's ability to survive these cycles shows it has legitimacy and durability that many other speculative assets lack. Institutional adoption has accelerated dramatically. JP Morgan has incorporated Bitcoin into investment strategies and research, highlighting its potential as a store of value. Fidelity and BlackRock are offering Bitcoin products to clients, and companies like Tesla, PayPal, and Square are actively holding Bitcoin on their balance sheets. This adoption matters because it increases demand, enhances liquidity, and provides a stabilizing effect on the market. Institutions are not just experimenting, they are signaling confidence in Bitcoin's long-term viability. Let's dig deeper into inflation. Inflation is the enemy of cash. The long-term average annual inflation rate in the US is roughly 2 to 3%, but in recent years, inflation has spiked above 5% due to rising money supply, loans, and government spending. The Federal Reserve has expanded M2 significantly since 2020, injecting trillions into the system to stimulate economic recovery. When dollars lose value, assets that are scarce, like Bitcoin, become increasingly attractive. Every loan issued by a bank, every government program, and every stimulus package increases the money circulating in the economy, and that makes Bitcoin's scarcity even more valuable. Unlike bonds, savings accounts, or even gold, Bitcoin combines scarcity with digital security and global accessibility. Now let's discuss why I believe Bitcoin could reach $500,000 per coin in the long term. There are several reasons. First, adoption and demand. As more individuals, institutions, and even governments adopt Bitcoin as a store of value, its price will naturally increase due to limited supply. Second, macro pressures. Global debt levels continue to rise, and central banks around the world are printing money to stimulate economies. The resulting inflationary environment makes traditional assets less reliable, pushing more investors to seek protection in Bitcoin. Third, network effects. Bitcoin's infrastructure, wallets, exchanges, DeFi platforms, and institutional custody solutions is maturing rapidly. The easier it becomes to buy, hold, and use Bitcoin, the more demand grows. Let's put some numbers on this. There are currently about 19 million Bitcoins in circulation. If we assume a market capitalization that aligns with gold's role as a global store of value, around $25 trillion, this implies a Bitcoin price of roughly $1.3 million per coin. Even in a conservative scenario, capturing half of that market, we are looking at $500,000 per coin. This makes Bitcoin not just a speculative asset, but a strategic long-term hedge. Some critics, like Charlie Munger, have been extremely skeptical about Bitcoin, arguing it has no intrinsic value. But as an equity research analyst, I see intrinsic value differently. Bitcoin's value comes from scarcity, security, and adoption. Its decentralized, censorship-resistant nature provides a utility and hedge that traditional financial assets cannot. Its value is validated by adoption, network security, and institutional recognition. The skepticism highlights just how disruptive Bitcoin is to traditional finance. Consider recent comments by Jerome Powell, chair of the Federal Reserve. Powell has acknowledged the challenges of managing inflation and controlling the money supply. Central banks are aware that inflationary pressures are not temporary. This creates a structural case for Bitcoin as a hedge. If the Fed continues to expand money supply to fund economic growth, debt payments, and social programs, the value of fiat currencies will be pressured, and scarce digital assets like Bitcoin will benefit. Former President Trump has also recognized Bitcoin as a strategic asset for investors. While politicians' perspectives vary, increasing awareness among high net worth individuals and policymakers signals legitimacy and acceptance. Institutions are integrating Bitcoin to protect wealth, diversify portfolios, and hedge against systemic risk. Let's also consider generational adoption trends. Millennials and Gen Z are increasingly comfortable with digital assets. They are using Bitcoin for payments, investing through apps like Coinbase and Robinhood, and engaging with decentralized finance. This generational shift adds a layer of long-term security, as younger investors are building a culture around Bitcoin that will sustain demand for decades. From my perspective as an equity research analyst, Bitcoin represents a combination of scarcity, security, institutional credibility, and macroeconomic hedging. It is not tied to the success of a single company, interest rates, or government debt. It is a global, decentralized asset that thrives in inflationary environments, which is exactly what we are seeing now and what we can expect for the next decade. To summarize, Bitcoin is more than a digital currency. It is a strategic, inflation-resistant, long-term investment that has survived cycles, gained institutional adoption, and is poised to protect purchasing power in an uncertain economic environment. Considering the limited supply, adoption trends, and macroeconomic pressures like the expanding M2 money supply, I believe Bitcoin could reach $500,000 per coin over the long term. That's it for my first video on American Investor. I hope this deep dive has helped you understand why Bitcoin is not just a speculative asset, but a strategic part of a diversified investment portfolio. I'm Simo, and I will continue sharing insights on stocks, financial markets, and investment strategies to help you make informed decisions. This is just the beginning, and there's so much more to explore in the world of finance and investing. Subscribe to follow the journey, and let's navigate the markets together.